Hello traders, today is the 14th of January 2011 and happy trading to you all directly from the TSTW 24 trading system, TSTW SYS08 trading system. We wish you a very happy trading day. London is now open. We are just an hour short of the gap, the starting point of the gap period. Okay, the gap period is between the 5:30 Eastern time up to 9:30 Eastern time. That's the gap period. Okay, and I'm looking again at the Euro USD, my favorite currency pair that I always pay attention to. And we are looking at the Euro USD, that represent the market itself. Okay, we use the Euro USD as the market indicator. In this video, I want to talk to you about the psychology of the market. The psychology of the market. What is the psychology of the market? During an uptrend, okay, when the price is rising, okay, as the Euro USD has done it yesterday, okay, during an uptrend, we must have a pullback, okay. So when the price is rising, okay, we must have a pullback during the uptrend. This is very, very important for the health of the market, okay. If the price is rising during an uptrend, okay, or an uptrend without a pullback, okay, is doomed to fail, okay. I repeat, an uptrend without a pullback is due to fail, okay. Anytime you see a price rising in a parabolic form, okay, which means the price going, like you see here, is a parabolic rising without giving any pullback, okay, that market has a high probability to crash down, okay, if it's not sustainable by the traders itself, okay. Because if you want to understand the psychology of the market, which we talk about very often, is that during this time, okay, when the price is rising, okay, very sharp rise of the price, so we have a clear-cut uptrend. Nobody is messing up with the bull. The market is controlled by the bulls, or the market is controlled by a small, okay, a small, well, how should I put this to you? A specific group of traders, okay. So the market is controlled by one particular group of traders, okay. So in the market we have many participants in the market, which are the market makers, okay, the liquidity traders, the momentum traders, the technical traders, okay. So during a sharp move of the price, the market is controlled by one particular group of the participants in the market, okay. So if the price is rising, whenever you see a price rising very, very sharp, okay, without giving any pullback, you know that there is a very tiny group of traders, okay, that are controlling the market, okay. Very important. So remember that anytime you see a price, the price rising very, very fast without giving any pullback, you know straight away that there is one particular group of traders in the market that are dominant at that particular point in time, okay. They are controlling the market. It can be a hedge fund manager, okay. It can be one particular, it can be the government, it can be a bank. You know straight away that there is one particular group that is controlling the market anytime you see a price rising without any pullback, okay. An uptrend without a pullback is doomed to crash, okay, because what is happening is that this is what I call a discrimination trading, okay, where you have one particular group only controlling the price. If that particular group pull, okay, their way out of the market will crash, okay. If you know about stock trading, okay, for those who trade stocks, you understand that sometimes you will see one particular person, okay, holding more than 30% or 40% of a share of a company, okay. The smart money, they don't like to invest in those kind of company, okay? If you are a speculator trader, if you are retail traders, and you know that one particular person is holding nearly 40% or 30% of one particular company, okay? He hold 40% or 30% of the share of that company. You know that if that person one day decided to pull his way out of the market, decided to sell all his share, there will be a crash in that particular stock, okay? The same thing when we are looking at the price, and the price is rising without giving any pullback, you will know straight away that there's one particular group, okay, a certain group of participants in the market that are controlling the market. This is about discrimination trading, okay, if I'm allowed to speak like this, okay? So this is what has happened yesterday. One particular group, even though everybody was buying, okay, but there is one particular group which is a dominant force controlling this movement of the Euro USD. As soon as that particular group decided to pull their way out of the market, you'll see this price coming down very, very fast. This is the danger of taking part in this sort of parabolic move in the price, okay? So anytime you are in a trend, okay, and the price is going very, very fast like this, the strategy that you need to use is to move your stop loss very close to the price. As the price is moving up, you are moving your stop loss very close to the price, because you do not know when the price will come back down. Because the price is not giving any pullback at all, okay, which is making it very difficult for traders to place their stop loss carefully, because normally in the uptrend, when the price pull back and start going up, that's where people move their stop loss, okay? If I show you one example how you manage your trade during the uptrend, okay, you see from here now where I moved my cursor, bear with me. The price started the movement from here, went up here, and a pull back here, okay? As soon as you see the price going up here, you remove your stop loss from here to this level here, okay? And then the price move up again, and then pull back again here. When you see the price start going up again here, you move your stop loss from here to this level here. That's how you do it during the uptrend. But when the price is moving very, very fast in a parabolic move like this, okay, it makes it very difficult for traders to control their stop loss. In that particular case, you must monitor carefully, moving your stop loss along the price, behind the price, carefully behind the price, okay? You can be 30 pips behind the price, or 35 pips behind the price, depending on your risk tolerance, because you do not know when the price will give a sudden pullback, okay? That's why I always talk about a healthy pullback in the uptrend, because in the uptrend the market will pull back, okay? If I show you again what I showed you already at the beginning of this video, you see here when the price was going up, when the price went up, okay, and give a pullback like this, is give and start turning around, it give opportunity to new participants to come into the market, which means increasing volume, increasing the bullish momentum. More bulls are coming in the market. Those who have missed the opportunity to enter the market here are likely to join it here, okay? And the same thing, it went up again, and then give another pullback, and it start turning around. People see trend line being broken. Other traders see it also. They decide to join this uptrend, creating what I call a healthy uptrend, okay? But you see in this section here, when the price going up like this, a lot of conservative traders, okay, those who are not aggressive traders, will step aside because the price is not giving any pullback, okay? So they are not prepared to risk a huge amount of money only to enter somewhere here and the price retracing back down on them. So they step aside waiting for that healthy pullback. And if that healthy pullback is not given, okay, you need to move your stop loss along the price very fast, controlling the price movement. Otherwise, the price can turn around very, very fast. This is the danger of what I call a parabolic move. Talking about the market psychology, you need to remember also and to know what kind of participant we got in the market. We know that in the Asian countries, okay, this is not to criticize our lovely friend from Asia, okay. It's about the mentality of a different country. We know that in United States, in America, most traders are bullish, okay. They like to buy, they don't like to sell. That's the truth. That's what we have found out, okay. Now in London, okay, United Kingdom, okay, we do not care whether the price is going up. We do not care whether the price is going up or down, okay. We will sell and we will buy, okay. We are not bull, we are not bear, okay. You cannot say to the British traders that they are bearish or they are bullish. They are both, okay, which is the right way to do it, okay, and we are proud of it, okay. Now, talking about the Australian traders, can be a bit excessive. What do I mean by that? They can be bullish and they can be bearish. But when they are bearish, they are excessively bearish. That's what my own observation. I can be wrong here, but that's what I've seen. When we see the Australian traders coming into the market and they are bearish the whole day. They are not going to change their mind. They will be bearish the whole day, okay? Which means they are honest. They'll show you the whole day they are bearish, okay? And they don't know when the price is about to change direction because they are just selling. They are a type of momentum traders, okay? And the same thing when they are bullish, they are excessively bullish, okay? Even though they are bullish, they can be bullish, they can be bearish, but they are excessively bullish. They are either excessively bullish or excessively bearish, okay? This is about the Australian traders, okay? So this is going into the mind of different type of people, okay? How they will react because this is affecting the price and how the price is moving. Now, going back to the Asian people, which is the Chinese, which is the dominant force in Asia right now. So I will not talk about other Asian people. I'll talk only about the Chinese people, not because we have anything against the Chinese, lovely people. The way the Chinese do their trade is that when the price is going up, okay, they do not give any pullback, okay. So the Chinese, when they come into the market, the price going up, it will be going up the whole day, okay. They are not going to give any pullback, okay. So they will push. They do not like the price to give a healthy pullback, okay. So they think that the price, when the price is pulling back, more people coming in, it's like this thing is going to get damaged, okay. That's the mentality of the Chinese trader. Right now, in the currency market, there are a lot of Chinese investment going into the currencies, and we see that sort of movement right now happening in the Euro USD and other currency pair. When you see a trend has begun sometime and the trend will not give any pullback, when you see things like this happening, you know that the Chinese are in the market, okay. So that's how you will know. Another thing also, this is not to criticize the Chinese, of course, okay, lovely people. The same thing sometime when I start trading first, how do I know that Americans are very bullish? You will see perfectly a clear-cut selling signal, okay? And or during London session, we see a clear-cut selling signal, and we will be selling nicely. And America open the market, they will change the market and then buy the whole thing altogether and spoil all the bullish signal. That's how we know that the Americans are bullish people. They don't like to sell, okay. Or sometimes they will see a selling signal and they will just stay away, and the market will have low volume because the market is only giving a selling opportunity and these people are not prepared to come into the market. So you see low volume and the market will stagger, the hold in a low volatility zone, which means we have a consolidation. And the next day, as soon as the Americans see a bullish signal, they are up for it, they come for it. This is not to criticize one particular group, is to understand the psychological level of each level, okay. And the same thing we see it with the Australian. How do we know? Because when we are trading with the Australians, we have noticed that when the Australians see a clear-cut selling signal, they will sell, okay. But do not expect them at one point to change their mind quickly. They are not going to change their mind quickly, okay. They will be taking profit. You will see a bit of rally during during that downtrend, if it's a downtrend, but the price they will maintain the downtrend, okay, excessively till the end. And sometimes if the downtrend is finished, they are still selling until they see that now it's all gone, okay. This is about the psychology of the market, okay. So whenever we see a price rising like this, we know, I mean, you can suspect that it's our friend Chinese that are controlling the market. Especially if you trade some of the Chinese stock, you will see the price is going in vertical direction and these people do not give you any pullback, okay. But the point I want to make in this video that for a healthy uptrend, okay, very important point, for a healthy uptrend, the price must breathe in and breathe out. Very, very important. I think we should teach this to all traders. Very, very important point. Because what usually happens, if you have one particular group controlling the market, okay, which means they hold, okay, a high percentage of the market, okay, as soon as these people decided to come out of the market will crash, which means if you have uptrend before, you will see a sharp move of the price to the downside instead of having what I call orderly move of the market, which means we see all the 5 Elliott waves, okay, up, down, okay, up, down, okay, breathe in, breathe out, breathe in, breathe out. Some traders find it very difficult to see, especially some of the people who are swing trading. They find it difficult to see sometimes the price taking back their profit. It happens all the time. So you are in the trade going up positively in your favor, and sometimes you will sit there, you will see the price retracing back, and you know this is a healthy thing. It's pulling back, pulling back, pulling back. So you just step back, okay, and as soon as you see continuing the trend, a continuation of the trend, you join again, okay, you join again, multiplying your position, okay. But for those who like to be aggressive traders, these are aggressive traders, okay, and they come in and they do their own thing like this, and this is not healthy for the market itself, okay, and this can create a perfect crash. That's what I'm talking about. Same thing, the downtrend. A downtrend must have a rally during the downtrend. So the price going down, after a while the price must pull up. People should take a bit of profit, okay, take a bit of profit when the price reaches a support level in the downtrend, allowing the price to pull up, more sellers coming in, okay, selling again, and they bring it down. Now, the last point I want to make in this video, that the only time, okay, the only time we usually see a parabolic move of the price, okay, is during the third Elliott wave, okay. You will see usually during the third Elliott wave, the third Elliott wave and the first Elliott wave can perfectly be divided into 5 small waves. I repeat, the first Elliott wave and the third Elliott wave can perfectly be divided into 5 small waves. But usually, the parabolic move is usually taking place in the third Elliott wave. So when we see the third Elliott wave, usually you will see the price going up, going up, going up, going up, non-stop, because this is where the money is made, okay? And after the third Elliott wave, the party is over, okay? So this is the only time. But when you see the full 5 wave being a straightforward trend, okay, no pullback at all, be aware that that market is a very good candidate for a crash, okay? So you may perfectly go use that strategy for trading. Go on, look on the stock and see a stock that is going up in a parabolic movement in one direction without any pullback, okay? All you need to do is to put it on your watch list and then now switch back to the lower time frame, looking for weaknesses, okay? And sometimes it goes so fast, you will see it, okay? Especially this is one thing that you can take advantage of. These who trade, those who trade the opening bell. You will see some people are specialists of opening bell, where you see the price will pull up big time from 9:30 Eastern time till 10 a.m. Eastern time. Parabolic move, phew, to the top, okay? No pullback, no breathing, no breathe out, okay? And then you will see it at 10 a.m. Eastern time. The market just changed direction. This is what we call a reversal, a total retracement of the move. That's what's happening here in this Euro USD. And yesterday we have this excellent uptrend, okay? Now everybody enjoyed themselves, okay? But the trend is not healthy because there was no pullback, okay? Yesterday there was no pullback at all. It was just boom, 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 okay? So the danger of that is that it will spoil the uptrend, okay? Instead of having orderly uptrend, you may see this price, okay, coming down completely because there was no pullback. There was no pullback, okay? So don't be surprised, okay, to see this beautiful uptrend, okay, coming back down to exactly where it started from. This is what I hate about this kind of uptrend without any pullback, because instead of having the uptrend continuing, okay, which we will, instead of having a lengthy uptrend, we will have a short uptrend. So all the gain of yesterday, okay, especially for those who are swing trading, okay, in this type of condition, you must move your stop loss very close. It does not matter whether you are taking out of the trend when the price starts pulling back, because the price did not move to the upside in an orderly manner. It's same thing for the downtrend, okay? This is about the psychology of the market and understanding different nationality, different character, how people behave in the market. It does not mean that they do not have the right to behave that way. They can perfectly, the Australian, the Chinese, the American, the British have a right to trade the way they want to trade. But the point I want to make in this video is not to criticize another participant, but to be aware of other participants, how they react in the market, so you can take advantage of that in order to cream the market consistently. I hope you enjoyed this video also, that you will put into practice in order to understand the psychology of the market and cream the market consistently. We are the TSTWSYS08 traders. Until the next time, enjoy yourself and be very happy. Thank you for watching, and speak to you soon.